Hey guys, Tony Denaro here, and let's start with the great news. Two hedge funds closing their doors today, Anchorage Capital, based out of New York, and Tybourne Capital, based out of Hong Kong, both shutting their short hedge funds down. There is some misinformation going on already in Twitter and Reddit. Let's talk about the facts and how these affect our plays on AMC and GameStop. All right, guys, let's jump right into it. Starting off with Anchorage Capital closing down $7.4 billion flagship hedge fund. Anchorage Capital is one of the biggest hedge fund investors in distressed debt, closing the doors after 18 years and returning $7.4 billion to its clients. At this moment, Anchorage Capital is suspending clients' ability to get their money back, and they have not given a date by which clients will be able to get their money back. In their statement in closing down this flagship fund, Anchorage said that in this current market where indiscriminate access to capital, elevated equity market multiples, default rates near record lows, and central bank policies supportive of risk assets, we believe that the asset liability structure of Anchorage Capital is not best suited to take advantage of opportunities in today's market environment. This move comes as many firms that previously invested heavily in distressed debt have shut their doors or pivoted the funds to focus on more structured finance and private capital. I am going to talk about how this affects AMC and GameStop, but before we do, let's get into the second one. Hong Kong's Tybourne Capital shutting its $2.8 billion hedge fund. The Hong Kong-based firm will return money to clients over the coming months and focus on long-only and private investment funds. Tybourne Capital Management is retreating from bearish bets that have become increasingly difficult to make money from, said people with knowledge of the matter. It told investors that growing passive money flows, market leverage, and retail investor participation in the markets have fueled volatility, hurting their especially short wagers. Retail investors have been thwarting the practice of selling borrowed stocks to buy them back at lower prices. Ding, ding, ding. Congrats, you guys. So let's get into the nitty gritty. I know that there are people already out there saying that these two hedge funds closing are definitely going to make AMC soar, make GameStop run up Thursday and Friday, maybe next week. How are these two funds closing going to affect us in these plays, and what should we expect going forward? We're going to start out by looking at the SEC 13F filings to see what positions these funds had in AMC and GameStop. I'm going to start off with Anchorage Capital. Looking at Fintel and the 13Fs, we can see that Anchorage Capital did have in Q2, ending back in June, 4 million shares worth of puts on AMC. That's 40,000 puts. However, by the end of September, according to their 13F filed on November 15th, they had 0 puts on AMC. They also have 0 calls and no long positions on AMC. Moving over to the 13F filings on Anchorage Capital and GameStop, they did have a position in the quarter ending in June of 100,000 shares worth of GameStop puts. That would be 1,000 puts on GameStop. They closed those out somewhere in the quarter that ended back in September. So they currently, for the last 3 months, have also had 0 put position on GameStop and no ownership of GameStop shares. What do we know about short interest on Anchorage Capital on GameStop and AMC? We don't know anything because nobody's required to report that. Come on, Gary Gensler. Moving on to Tybourne Capital, I looked at the 13Fs for both AMC. Right here we have AMC. Searching right here for Tybourne, I'm not coming up with any previous long position calls or puts from Tybourne on AMC. And similarly with GameStop, when we look at the 13F filings for GameStop and search for Tybourne, I'm not able to come up with any previous ownership of calls, puts, or a long position. Once again, did they have a short position on AMC or GameStop? We don't know because that's right. Nobody is required to report it. So what do we make of this data? Am I going to run around having a party because I know for sure that these two hedge funds were shorting AMC and GameStop and they are going to cover those positions and run our price up in the next coming days or weeks. I can't do that based on the data because unfortunately they have been long out of their put positions and I don't know if they had any short positions. However, two multi-billion-dollar bearish hedge funds getting out of the market definitely could be a sign of weakness for the other short hedge funds, and that is something that we can be excited about going forward. I am Tony Denaro. I live stream every day during market hours from market open to market close. Buy and hold AMC and GameStop. Join us on a live stream. Don't forget to buy and hold that subscribe button, and I will see you on the next video.